All right, everybody, welcome back. Ready to get our hands dirty with some serious financial intel.
Always up for a deep dive, especially when we're talking about a firm like Moelis and Company.
That's what we're digging into today.
Whoa.
There are 10K filings from the past few years. Now, you've probably heard of Moelis and Company. They're a big name in investment banking. But what makes them really tick? That's what we're here to uncover.
Yeah, what's interesting right off the bat is how they talk about themselves, even compared to those Wall Street giants. It's subtle, but it's there in the 10K.
They're not just chasing headlines, are they?
Exactly, you hit the nail on the head. They emphasize this whole long-term partners thing, not just racking up transactions. Like, they mention it constantly throughout these filings. It's more than just corporate jargon.
Yeah, it makes you wonder, right? How are they picking clients, structuring deals, maybe even turning down those quick wins for something more substantial down the line? It's a different game they're playing.
It's a different mindset entirely, yeah.
Yeah.
And then you see their expertise in things like complex risk exposures, acting as expert witnesses. It's telling, you know?
It's like they're the financial world's equivalent of those detectives, specializing in white-collar crime. The ones who dig deep, follow the money, and then bam, they come out with the evidence.
That's a great analogy because they are sought out for that ability to really analyze risk, understand these complex financial instruments. And, speaking of digging deep, we have to talk about their people. Moelis and Company consistently highlights their team, right? Like, it's their greatest asset.
And yet, they're very clear in the 10K filings about not using a commission-based pay model, which, let's be honest, that's almost unheard of in finance, right?
Yeah, it's a huge point of differentiation. I mean, think about it. In most firms, it's all about individual bonuses. It breeds competition, sometimes at the expense of truly working together. But Moelis and Company structures their compensation in a way that actually rewards teamwork, long-term vision.
So how does that play out in practice? What does that look like day to day?
Well, they even mention in their filings that almost every single transaction they handle involves at least 2 managing directors. And that's not just for show. It's about emphasizing collective wisdom, experience, a diversity of perspectives on every deal.
So they're really putting their money where their mouth is when it comes to collaboration. It's not just talk.
Exactly. It's like they're saying, we only truly succeed when our clients succeed. And that message is woven into everything, from how they pay their people to how they build those client relationships. But we also need to consider the risks they face.
Because every business has them, right? No business is immune to challenges. What does Moelis and Company itself identify as potential hurdles? What are they worried about?
Well, competition from those bigger banks is a given. The big players have deeper pockets, a wider array of financial products they can offer. That's always going to be a factor.
Makes sense. So how does a firm like Moelis and Company, with maybe a smaller team, maybe a narrower focus, how do they plan to compete in that arena?
They're banking on their agility, their specialized expertise, and that client-centric approach we talked about as their key differentiators. It's about offering a level of personalized service and truly tailored solutions that the bigger firms might struggle to match.
It's almost a David versus Goliath situation, except in this case, David has a pretty impressive track record in a very particular set of skills.
Exactly. And then, of course, there's the economic climate. That always poses a challenge, right? And their filings acknowledge that. They acknowledge how downturns can impact their work. Mergers and acquisitions tend to slow down when businesses get nervous.
Sure, because uncertainty makes companies hesitant to make big moves. Makes sense. What about restructurings? What happens with that side of their business when the economy takes a hit?
They might pick up in those times. But the key takeaway here is that Moelis and Company recognizes these fluctuations. They're realists. It's part of their business landscape.
Speaking of potential bumps in the road, there's this one little detail in their 10Ks that caught my eye: the possible reputational risk from former affiliates. The ones still using the Moelis name, even though they're not connected anymore.
Ah, yes. They specifically call out Old Holdings and MA Financial. These entities they no longer control, but which still carry that name.
It's like they're trying to maintain this spotless reputation while their distant relatives are out there doing their own thing. You have no control over them, but it could still reflect back on you.
It's a unique challenge, for sure, and it just underscores how crucial reputation is in their line of work. Any misstep by these former affiliates, even though they're separate now, it could have ripple effects.
Okay, so they've got competition, economic cycles to navigate, and this whole reputation tightrope walk. Sounds like they have their work cut out for them.
It's a lot to juggle. But that's the world of high finance, right? High risk, high reward. And speaking of which, let's dig into their financial performance. Because their 10Ks, Well, they tell a pretty compelling story, especially when it comes to their revenue.
So revenue, right. Their revenue growth has been nothing short of impressive from what I can see.
Oh, absolutely. When you dig into the numbers, it's right there in black and white. Their 2020 filing, for instance, they reported a 26% jump in revenue compared to 2019.
Okay, wait. 26% in a single year.
Yeah, a single year. And they're attributing this growth to a couple of key factors. One, an increase in the number of deals closing, which makes sense. More deals, more revenue, but also larger fees per transaction. So they're getting involved in bigger, more complex deals that command those higher fees.
It's not just growth, it's like they're writing their own rules for success. What's the secret sauce? Who are these clients fueling this kind of expansion?
Well, they're definitely attracting some serious players. The 10Ks highlight the surge in what they call fee-paying clients, specifically clients paying $1 million or more in fees.
We're talking high rollers here. Okay, so how high are we talking?
In 2019, they had 150 clients in that category. By 2020, that number skyrocketed to 205.
Wow. That's a pretty elite club to join. I mean, you don't just hand over $1 million check unless you're pretty darn confident they can deliver.
Exactly. It really speaks to the kind of trust they've built within those circles. A company willing to pay that much in fees, they're dealing with high-stakes, intricate situations. They're not calling Moelis & Co. for the small stuff.
Now, you're the financial whiz here, so help me understand this. What's notable about their compensation expense as a percentage of revenue? Because something about that just kind of jumped out at me.
Sharp eye. That's a great question. Because while their compensation expense is substantial, it's actually decreased as a percentage of revenue over the years we're looking at.
So they're getting more efficient as they grow.
Exactly. They're generating higher revenue without proportionally increasing their payroll, which suggests, at least on the surface, they're getting better at what they do, more efficient, more profitable.
It's not just about attracting those big spending clients. It's about doing it while keeping costs in check.
Yeah.
Smart. What about their non-compensation expenses? Their 10Ks mention those fluctuating quite a bit, up and down, year to year. What should our listeners make of that? Why should they care?
Right. So non-compensation expenses. What we're talking about here is everything else. Things like office space, professional fees, travel, all those operational costs that keep the lights on and the deals flowing. And you're right, they do fluctuate, and those fluctuations can actually reveal a lot about a company's priorities, how they're adapting to change. For example, Moelis & Co. saw a decrease in these expenses in 2020, which, given the pandemic's impact on travel and in-person events, makes sense.
Right, like a lot of businesses, they had to adapt to that remote work world. Zoom calls instead of flying everyone to some fancy office.
Exactly. But then in 2021, those expenses went back up, suggesting a return to, shall we say, pre-pandemic activity levels, which again reflects the broader economic trends we were seeing at that time.
It's like looking through a little window at the global economy just by tracking their office supply budget.
It's a fascinating insight, isn't it? The little details can tell such a big story. Now let's shift gears for a moment because something caught my eye while I was reviewing these filings. This whole unrecognized tax benefit thing.
Yes. I was hoping we could unpack that a bit because, to be honest, it sounds a little technical, even for a deep dive like this.
It is a bit technical, you're right, but bear with me, I'll try to keep it simple, I promise. So, they repeatedly state that no unrecognized tax benefit was recorded in their filings. To understand why this is significant, we need to touch upon uncertain tax positions.
Okay, I'm listening. Lay it on me. What are uncertain tax positions?
Essentially, these are situations where any company claims a tax benefit, perfectly legal, of course, but there's a chance, a possibility, that the tax authorities, those folks at the IRS, might disagree.
So it's like saying, hey, we think we deserve this tax break, but the IRS might come knocking with a different opinion.
You got it. That's a great way to put it. And many companies, to be safe, they'll record what's called an unrecognized tax benefit on their books, just to reflect that potential liability, that possibility that the IRS might not see things their way, just in case. But Moelis & Co., they consistently choose not to.
Interesting. So they're essentially saying, we're so sure, so confident in our tax strategies that we're not even going to acknowledge the possibility of being wrong.
It does suggest that, doesn't it? It suggests a high degree of confidence in their approach. And I think it links back to their whole message of being that trusted advisor. They're aiming for transparency. They're aiming for consistency. And they're putting their money where their mouth is, even when it comes to their taxes.
It's a bold move. I'll give them that. But before we get too caught up in the numbers, and I know we've thrown a lot of them at our listeners today, I want to make sure everyone listening is still with us, still grasping the bigger picture here. We've covered a lot of ground, from Moelis and Company's unique approach to business, their focus on people, the risks they face in that competitive landscape, and now their, shall we say, intriguing financial moves. It's a lot to take in.
It is, but it's important stuff. We've seen how they're navigating this incredibly competitive landscape, how they're adapting to constantly changing economic conditions, and how they're attracting some of the biggest players in the game and doing it their own way, which, frankly, is what makes them so interesting to analyze. But there's one final detail I want to touch upon before we wrap up, something that I think speaks volumes about how Moelis and Company values their top talent. Incentivizes them, actually.
You're talking about that tax receivable agreement with our managing directors, right? Because I have to admit, that one had me a little puzzled when I first came across it.
Yeah, it's definitely unique, and it highlights their, let's call it, meticulous approach to both compensation and their overall tax strategy.
All right, so break it down for us. What's the deal with this agreement? All right, so break it down for us. What's the deal with this agreement?
So it's a bit intricate, but in essence, it involves some, shall we say, creative calculations based on the tax benefits the company realizes, from certain financial transactions, certain moves they make. And essentially, a portion of those savings, a share of those tax benefits, gets passed along to the managing directors.
So it's like a bonus, but instead of just straight cash, they're getting a piece of the company's tax efficiency.
Precisely. It aligns their personal financial interests with the company's overall tax strategy, which, when you think about it, is a pretty clever way to keep everyone motivated and moving in the same direction.
Okay, so it's a win-win. The company benefits from smart tax planning, and the managing directors, the ones making the deals happen, they share in that success.
Exactly. It's mutually beneficial, which, in the world of high finance, is often the name of the game.
It's a pretty sophisticated approach. Got to give them that.
It really is. And it speaks to that meticulous planning, that attention to detail that seems to be a hallmark of how Moelis and Company operates.
It's like they're playing chess while everyone else is stuck playing checkers.
That's a great way to put it. They're thinking several steps ahead, they're anticipating the challenges before they even arise, and they're finding creative, often unexpected solutions to overcome those challenges. And that, I think, is a key takeaway from our deep dive today.
Absolutely. So there you have it, folks. Moelis and Company, a firm that's not afraid to play by its own rules, challenge the status quo, and consistently find those winning strategies in a world that's constantly changing.
We've gone beyond the surface level, beyond the headlines, to really understand what makes this firm tick. Their long-term vision, their emphasis on a collaborative culture, and of course, their knack for navigating complexity and coming out on top. It's an impressive track record, to say the least.
We've thrown a lot of information at you today, I know. But remember, this is just the starting point. Consider this your launch pad for further exploration.
Because these 10K filings, they're public documents, they're out there for anyone to dig into, and there's a wealth of knowledge waiting for those who are curious enough, driven enough, to go even deeper.
So don't just take our word for it. Go out there, ask your own questions, connect those dots, draw your own conclusions. Because the most valuable knowledge, the knowledge that truly sticks with you, is the knowledge you actively seek out.
Couldn't have said it better myself. And on that note, until next time, happy deep diving, everyone.